John Jenkinson, happy and proud to be with you today here on RFD TV and Rural Radio Channel 147 on Sirius XM. Well, let's see what's going on in the corn market right now. We started out with a little bit of strength here this morning so far. Got up awfully close to some resistance. In fact, 325.5 actually touched what some would say could be resistance. We're up 2 1/4 right now at 323. Todd Horwitz is with Bubba Trading, and he's here with us. Todd, how important is it that we should be able to, if we could go back up there to that 325 area, if we could close and settle there today, maybe tomorrow, could that get us that next leg higher that you've been talking about, you think?
Good morning, John. You know, listen, I think if we can get through it, we've got a great chance to. I think what you're seeing is the overall blasé action throughout the entire grain index here is giving us some hope. Because, again, if we can get above certain key levels, I think that will attract the new money buyers that we're looking for, which will help push these prices higher. It's been so quiet and so lackadaisical that it's been very hard to get excited. The good point has been in corn, it's held the lows. Soybeans have held the lows. Wheat's a little bit weaker, but I think if we can get corn 327, 328, I think we could be off to the races and go up to the next level, which would be the 340 to 350 level. So I think we could be on the move if we can get through. But the very fact that they're holding these great support levels is very exciting to me.
All right, let's get into the soybean market here and talk a little bit about that and the wheat market as well. Over in soybeans, we're down 3.5 on the July, November down 2 1/4 at 850.5. Let's go on to the wheat market then also and see what's going on there. We're up a penny now on the Chicago July. We are up, or I'm sorry, we're down 4.5 on the Kansas City. So kind of a couple of different directions going here in the wheat market. The Minneapolis wheat market is up 4. Why the pressure in the Kansas City wheat market, that HRW market? We've been hearing stories that a lot of fields are suffering quite a bit out in the western part of the wheat belt.
Well, Jen, you know, listen, when I look at Kansas City, again, my biggest issue there is truly the lack of real liquidity there. So it only takes one big order to pressure that market. And again, when markets are thin and lack real liquidity to begin with, you know, it's hard to get, you know, either to try to make a position one way or the other. And right now, you know, guys are trying to hedge or trying to sell some futures against position. And at the end of the day, I think they're all going to go higher. And I think we're going to be very strong. I think it's going to be a good year. I think that the fact that we're opening up and starting to see the flow in the economy, I think that will really be a big boom to everybody. And I think that will help a lot of these prices move higher.
What about the NASDAQ, Todd, and the financial market as a whole? I know that you've mentioned several times to me that we just don't lack that we do lack a lot of liquidity over there in that market as well. Same issue here as what goes on with the Casey wheat?
Well, again, I think when you look at the NASDAQ, I mean, look, the bottom line is it's breaking out. It's at new highs. I mean, it's not, you know, all-time new highs, but it's at new highs in recent. It's held and is breaking out. The real issue in equity markets, like anywhere else, is their volume is ridiculously low. The overall liquidity, which, you know, lack of liquidity creates much bigger moves than you might get. It creates actually what we'll call air pockets in markets. And when they start chasing them in one direction or the other, you get these big moves that really shouldn't be there. But we don't have really two-way trade right now because you have too many people trying to trade what the Fed is saying, and they're talking today. And that's what's creating more of these big moves in the market every day. But in the meantime, technically, the NASDAQ's breaking out, and it has no reason to stop now. So the other three are still in that consolidation range, but the NASDAQ itself has broken out, so it could continue to go higher. But again, that lack of volume, lack of liquidity is always a concern because when it comes back, it's probably coming back in on the sell side.
Todd, always a pleasure, my friend. Thank you very much. We'll talk to you again very soon.
Thanks.
And we'll check out what's going on with the gold market, and then we'll get into the livestock trade next year on the Market Day Report. We are going to go back here in just a moment and continue our visit with Todd Horwitz. First of all, though, the future. Let's go with the cutouts here first. We have brand new cutouts for the pork side of the trade anyway. Still waiting on beef cutouts from USDA. Carcasses down 103, the loins up 72, the hams down 836, and the bellies up 116. Now the futures. Here we go. Live cattle market starting the June contract down 25, 98.47. August is down 30 at 98.55, and that October is down 55. We got a little bit of weakness going on here, despite the fact that yesterday we actually saw some cash cattle trade pop up from about 170 to 190 in the north. Over in the feeder cattle market, it's August down 87 at 131.67. September feeders are down 70 at 133.05, and the October is down 47. Lean hog complex, June is up 7, 57.72, but that's the only one. July is down 35, the August down 32. But let's continue this conversation with Todd Horwitz. Todd, we've got a cattle on feed report that's going to be out this Friday here a little bit. Some people are talking about that, but probably the bigger story is what about the consumer? What about demand destruction with these higher prices that we've seen in the box beef? What about the economy? Is that a bigger player right now, or at least as big a player in this protein complex as a whole?
Well, John, I'll tell you, I think that cattle, first of all, looks great. I think the little bit of selling today is expected. It should pull back a little bit. We've had a heck of a rally going up. So again, I'm not at all disturbed by a small pullback. I'd be looking to be a buyer. I think that the very fact that we're going to open up the economy, that will clear the decks and take away some of the high prices that were at the market. Remember, we had a big difference or big variance between the actual what they were worth and what they were trading in retail because you couldn't supply them. Well, now as we get the supply chain starting to open, now we can have some demand. I think that will really start to help at the farm prices and bring those prices back up to where they should be. And I think that this whole economy starting to open is great for the meats, and I think we're going to see much higher prices as we go forward. But a little bit pullback should never be concerned, and I have no feeling or worry about what's going to be done in cattle on feed because, again, a lot of it will be based on a market that was closed with no supply chain.
Okay, Todd, well, we always appreciate visiting with you. Thank you very much for hanging around here and talking to us today about what's going on in all of these markets. Hope you have a great afternoon. Todd Horwitz with Bubba Trading. I do want to see what's going on with the crude oil market at this point as well, since we've been talking about some of the outside markets. A little bit of a pullback. June down 17 cents right now at 31.65. The rest of those contracts all pretty consistent, Christina. They're about anywhere from 13 to 17 cents lower a barrel.